Thank you very, very much for joining us. All the way from the Chicago Booth School is Professor Raghuram Rajan, India's former central bank governor and a man whose every word the markets do hold by. Thank you very much, sir, for being with us. I do want to start this discussion by talking to you about the state of the global economy, of the world that we live in. Many people believe that we are in an increasingly protectionist, inward-looking world. And what's happening between the US and China is eventually going to take a big toll on global recovery. What's your take on that?
Well, it is a big overhang right now, and I do think that we should be worried about the dialogue coming from each country. In the US, make America great. In China, make China great. Every country wants to make itself great, but it comes at the expense of relationships with other countries. And I think the trade conflict right now is one of those worries. The hope is that what we'll see over time is a better understanding of each other's position. I think there are some agreements to be had right now. If in fact China can convince the United States that it will change its behavior on the acquisition of intellectual property and the extent to which it coerces companies coming into China to part with it. And on the flip side, if the US assures China that it's not going to use tariffs as a general means of blocking China's path to growth, there is an agreement to be had. But it requires significant negotiation. It requires a deep understanding of each other's position. And ultimately, it requires an acceptance that China is going to be one of the big powers and has to have place on the global stage, eventually on par with the United States.
No, absolutely. And I think you're taking the discussion in a direction where the narrative needs to be that the US is no longer the big boy of global trade and China is no longer, the US is no longer a torchbearer and China isn't a goon, and there needs to be meeting of minds. But if I may ask you, what is your sense? Is China prepared to play the role that it needs to play to be taken at par with the United States?
I think it's a process of learning, and I think you can't expect China to do that immediately. But at the same time, the worst way to get China to become a responsible global player is to essentially tell them, we don't like your rise and we're going to stand in your way. What that means is then China will back off from international engagement, focus on building its power, looking both inward and regionally, and eventually that will not be good for the world, because it certainly will be the start of a Cold War, if not eventually a hot war. So I think there needs to be much more dialogue between the countries, and I don't think this is, I think a cosmetic agreement, which is possible at the G20 meetings, will satisfy nobody and will serve no purpose, because ultimately you have to recognize the deeper sort of challenges that both countries face today.
Dr. Rajan, while the world was celebrating United States becoming the whole global engine growth once and all over again, are there fault lines that you see just yet? Because many people believe President Trump's policies are indeed very short term. And things may go belly up. There are structural issues that still exist with that high levels of growth that the United States was expected to see.
Yeah. No, we've had 10 years of very easy money, and that has resulted in high levels of leverage, both in pockets in the United States, but also across the world. Enormous amounts of money have flowed into the emerging markets. And what that means is, as the Fed continues to raise interest rates, and it will do so because the US economy, as you said, is chugging along very nicely. The labor market is very tight. The job numbers that came was very healthy, but also wage growth is picking up. So the Fed is worried about inflation. It's going to raise interest rates. And entities that have borrowed a lot, especially in dollars, are going to face the consequences down the line as rates go up and the rollover becomes more difficult. So this, I think, is certainly a concern. Today, it is masked by the strong growth of the US economy. But remember, this is a stimulus which has come late cycle. It's a fiscal stimulus which eventually will wear off into next year, at which point you'll have the Fed high rates as well as the high debt, but not the stimulus for growth. So my sense is at this point we should be preparing for a more volatile world going forward.
And a more volatile world is perhaps going to have a very telling effect on currencies all across the world. And it's only fair that I ask you the question. While we in India have been unduly worried about how the rupee movement has been extremely volatile, looking south, what is your entire take on this? Are you somebody who believes that this is here to stay, because as the dollar strengthens, emerging market currencies will weaken, and yes, maybe the rupee had appreciated too much. Is this the true value of the rupee? Because before I plunge into India headlong, I just want to get the the currency part of the debate out of this.
So I learned way back in my tenure at the IMF, never comment on currencies. And I'll stick to that, because we really don't know what the true level should be. I think by most estimates, there has been a adjustment of the Indian rupee towards a more competitive value. I think depending on where you look from, the Indian rupee is probably appropriately valued, or still, you could either argue a little undervalued or a little overvalued. But I think that at this point, our focus should not be so much on the rupee, but on doing all the things that will allow the rupee to find its appropriate value, which means focus on macro stability and ensure that India presents a very healthy picture to the world when that volatility comes.
I don't want to pull you in a controversy of any kind, but we were speaking to Governor and former Governor Y.V. Reddy, and he said the problem with currency management this time is that so far it was the central bank that was doing it. For the first time, we are seeing a dual function being performed by both the government in New Delhi and the central bank. How do you believe this dual function is going to augur for the management of the currency going forward?
I don't know what he has in mind. Ultimately, it's the trading desk at the Reserve Bank, which trades both in the futures market as well as in the spot market, and also so in that sense, I'm not sure what he means by dual role. If he means that there is more being voiced about the rupee from Delhi, well, that varies from administration to administration. The historical sort of norm has been that really it's the RBI which talks about the exchange rate, and typically in my time we didn't talk about it either, because it was a sensitive issue. There's no way you can speak about it in the right way. Just leave it alone. Don't talk about it. Don't try and predict it's going to be this or it's going to be that. And if you're moving markets with what you're saying, you probably shouldn't be saying it.
Point indeed. I do want to have a further discussion on the rupee and the current account in just a bit, but I will do that when I'm talking about India, because I'm not done talking about the world just yet. The Iran sanctions, and I know a lot of people are breathing easy and saying that, markets around the world, and especially India, have got some sort of a relief. But what is this eventually going to mean for markets that import from oil, for the oil markets at large? Because the larger message from the United States is that it wants Iran export of oil to be brought down to zero.
Yeah. Yeah, no, I think the US is not afraid of using its various economic powers in a direction, in directions where I think it will have effect. And certainly, I think in this administration, there is a belief that if Iran is brought to its knees, it will effectively agree to all that the administration wants in a new Iran treaty. So I think we've got a waiver, as I understand it, for 6 months. But I have no doubt that once the oil market is well supplied, and prices are reasonable, the administration will try again to shrink the supply of Iranian oil. Now, that said, if the oil market is well supplied and prices are reasonable, it may not be directly harmful for India. Of course, there are bigger geopolitical issues at stake. But I think that if in fact it comes when the market is tight, which is possible, then I think we could see a ramp up in oil prices, which could be harmful.
Fair point. Dr. Rajan, if I may turn to India and really talk to you about the about some of the structural issues that bother a lot of people right now, and one of them, till not so recently, till 2 weeks back, before the central bank and the government got into some sort of a fist fight, was a very wide current account deficit. We saw various measures being taken, and you started off your interview by talking about America first, and in a word I said, which was increasingly insular. Do markets like ourselves also run the risk of looking inwards, and is that going to be fatal in the long run? Many people believe that yes, technically we may still be WTO compliant and all of that, but the message on import duties, the message on the kind of things that we took is perhaps not right, even if it is being done with an aim to curb the CAD.
Look, I think we have to have a longer-term strategy in mind. I think historically, short-term moves to address short-term problems have proven sort of problematic. In the longer run, if we want to make in India, I think we have to have a far more open economy. We need to be part of global supply chains. We need to attract the business that is leaving China and going to Vietnam rather than coming to India. That typically means much lower tariffs. Of course, we have lowered tariffs over time, but lower tariffs and a presumption that tariffs will stay low and predictable, because just haphazardly raising it here and raising it there will essentially make it very hard to produce in this country. So I think given how much of the components that we products we export are imported, our aim should be to lower tariffs generally and to have a more open economy. Of course, we can be measured in that and think carefully about it. But this knee-jerk raising of tariffs here and raising of tariffs there to deal with what is fundamentally a savings investment problem, I think is problematic. That said, the current account deficit is heading towards 3%. I think that is certainly one worry, especially if the price of oil, which is so volatile, pushes it higher. The other big worry is, after 3 or 4 years, actually 5 years of fiscal consolidation, the general government deficit, which is state plus center, is still stuck at around 7. In fact, over the course of this government, it has been going up, not because the center hasn't done what it is supposed to do, but because the states have been increasing their deficit. I think the one time we had a big jump down was, when Mr. Chidambaram came and reduced the fiscal deficit by about a percentage point. But since then, we've been stuck at about 7 for the aggregate. That's a problem, because a 7% fiscal deficit doesn't look that good when you have a current account deficit to boot, as well as you basically have growth, which is around 7.
Someone who's an ace fault line reader, what is a bigger worrying for you today? A combined fiscal deficit of states and center at 7%, and this could even bulge further, because there is oil that's could be the party pooper. Tax revenues are going to be under pressure, especially from the GST point of view. So what is a bigger worry today? The possibility of a wider fiscal deficit, or current account deficit at 3% and oil being extremely volatile as it is?
You're asking me to choose between the devil and the deep blue sea. Both are bad. Let me put it this way. I think, we have had a number of committees which have talked about responsible sort of fiscal management, including the N.K. Singh committee. And I think we should take from all that. There is sometimes a tendency to believe that all that markets worry about is the bottom line number on the fiscal from the center. And clearly it's much more than that. As we've seen with the pricing of government bonds, the yields have moved up, even though the center is bringing down the fiscal deficit. The way you bring it down also matters, whether you bring it down by actually matching revenues to expenditure, or whether you get one-time dividends from PSUs, which then go out and borrow in the market, and therefore, by that token, don't actually reduce your overall borrowing requirement. So I think, and I'm not saying this is particular to the current government, but over time, we have steadily tried to improve our fiscal management, and we should continue to do so, because ultimately the markets are not fooled by numbers if they don't believe the underlying sort of fundamental change.
No, fair point indeed. And Dr. Rajan, I can't not talk to you about what's really happening between your former institution and New Delhi right now. And I have a really simple question. There is a disagreement, and you know, in the past, you've had disagreements, your predecessors have had disagreements, but they've all been brushed off as intellectual disagreements, intellectual dislikeness for each other's views. But has the matter really moved beyond the realm of intellectual disagreement this time around? And if I may ask you a very pointed question, wrath of markets, was that an inappropriate comment for the central bank to make?
No, let's back off a little from the current controversy and just think a little bit about what really the relationship between the central bank and the government is. Ultimately, a good analogy, I think Dr. Viralacharya talked about T20 and test match, but I think a good analogy of what the central bank is it's a seatbelt for the government, which is the driver. The driver can decide whether to put on the seatbelt or not, and if the driver doesn't put on the seatbelt, which is useful, the seatbelt is useful in times of a crash. Now think of the central bank as thinking about that crash and saying, I want to protect financial stability because I don't want that to be a terrible event. And of course, the driver is thinking about the process of normal driving and says, well, I want to be relatively free of constraint. But you know, when they talk to each other, they realize there is some value to putting on that seatbelt because it prevents the really unfortunate eventuality. And you know, if we want to extend the analogy further, one can think of Dr. Acharya's speech as basically being that warning which comes on when you don't put on your seatbelt, saying, put on your seatbelt, put on your seatbelt, and hopefully eventually that warning is adhered to. Now, the historic relationship between the government and the RBI has been based on the fact that the government naturally and correctly thinks about pushing growth, and for that it wants maximum freedom given to all the entities who are responsible for growth. While the RBI focuses on financial stability and says, here is the amount of growth I can allow without impinging on financial stability. And they work with each other on that basis. The government always pushes the innumerable letters on my table coming from the government saying, relax this, relax that, relax something else. And they knew that we would look at the letter carefully, take a view, but that view would be saying, how can we maximize growth while protecting financial stability? And then when we said no, they would go away and say, okay, fine, they've thought about it. And you know, 2 days later, another letter would come on some other issue, and they would keep trying to press the boundary. Ultimately, the responsibility was for the RBI about financial stability, and if we failed on it, we would be held to task. So given that responsibility, we had the authority to say no. And let me remind you of that quote in Dr. Subbarao's book, where he talked about the relationship between Dr. Reddy and Mr. Chidambaram based on a phone call, where Dr. Reddy's side he was hearing, and Dr. Reddy said no, 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 and yes, eventually. And when Dr. Subbarao asked, what were you saying no to? He said, he asked me to relax this and relax that, and I kept saying no. Ultimately, he asked, can you hear me? And I said, yes, and that's how the call ended. But that, I think, anecdote is really about the relationship between the Reserve Bank and the government. The government appoints the governor, appoints the deputies, but ultimately goes by the views, knowing these are professionals. They're not doing it for political reasons or for their own self-interest. They're doing it because they've taken a view on the ultimate stability of the country.
I'm tempted to ask you if the two can be friends, because one is a technocrat, the other is a hard-nosed politician, and I'm not referring to individuals here. I'm really referring to the two men who head it. The RBI governor is supposed to be a technocrat with this team. The finance minister of New Delhi are hard-nosed politicians with very different objectives. And you're right, your table must have been laden with letters from New Delhi, but in some sense, are these two men or women, hopefully in the future, from Mars and Venus, where the two are going to disagree because they've got two different objectives, and you know, it's going to be elusive for us to try and bring them together?
No, I think it is possible to disagree but still be respectful of each other's territory. And I think certainly in my relationships, there were many disagreements. But I hope there was an understanding that this was not because of bloody-mindedness, but because there was a worry. And they knew when the RBI said yes, it meant we were taking responsibility for the financial stability consequences. And we always tried to maximize the potential for growth while keeping that financial stability concern. And this is what sometimes in the commentary out there in the press, I think people don't understand. Of course, the RBI is essentially, in some ways, an agency of the government. And of course, it has to respect the overall sort of concerns and objectives of the government. But the government has entrusted it with the responsibility for financial stability, and therefore, it has to, as a good responsible entity, carry out that responsibility. And sometimes, as I said, the seatbelt constraints. But that seatbelt constraints because you put it on, and you put it on knowing that it will prevent you from an accident.
I know while many letters have been laid on your table and they've been laden with demands from the central government, but in a lot of ways, I have to refer to Section 7 and the possibility of it being invoked, sections of it being invoked. Do you believe, and my question is, under what circumstances is invoking of Section 7 really justified, or are these nukes that should never be used?
Let me put it this way. First, Section 7 hasn't been invoked. So that's the good news. And I do believe that when the relation gets so precarious that it has to be invoked, we have to be very worried. That said, I think the dialogue between the Reserve Bank and the government is always an ongoing one. There are always sort of points of view being expressed. Sometimes there are sort of disagreements, but ultimately it works based on respect. You have to know why the other guy is doing what he's doing, and ultimately at the end of the day, you have to part, maybe not as friends, but as respectful of each other's territory. It's when you encroach on each other's territory that it becomes problematic. And I would hope that that respect gets re-established.
I kind of agree with you there, but I want to talk about a substantive issue of disagreement, and one of them is liquidity infusion in the markets right now. The government is very insistent that this must be done to bail out the NBFCs that are facing a cash crunch. The RBI believes there's enough liquidity in the system, and that is really a judgment call for the central bank to make. But is this really a cry for more funds, or is this more funds required to avert a bailout, avert a superstition by the government of many more NBFCs like ILFS?
So, look, I think that I don't want to get into the specifics of the case because there's more information than I have on the specific frailties of NBFCs. But generally, in a situation where there is financial stress, the central bank has to figure out whether it's ultimately a liquidity problem, that is, infusing liquidity into the market will resolve some of those issues, or is it a solvency problem? That is, some of these entities have taken on really bad assets and really they are decapitalized. So the reality is, if it's a solvency problem, that doesn't mean that the government and Reserve Bank shouldn't intervene, but it really involves the fiscal use of funds, and therefore the government has to be directing that and putting taxpayer money at risk. Now that's a big political issue because you're using taxpayer money to bail out a private entity, and people will ask, these people who made money over so many years, why is it that you're bailing them out? That was obviously a big issue in the United States when the bailouts took place. If it is primarily solvency, you can address that by infusing liquidity into the market through more OMOs. And if the problem is you need liquidity directed to certain places, perhaps lend to certain entities who can make those loans. I think the recent move to allow sort of banks to guarantee bonds by these entities is a good one. That said, I think any kind of intervention should come after the entities that are in difficulty have taken their own steps to bolster their balance sheets. If your view is your commercial paper is coming 6 months from now and therefore you're worried about rollover, shouldn't you be raising equity now, even if prices are depressed, in order to back your balance sheet? That would be a good signal that in fact it's not directly running to the government and the central bank to bail yourself out, that you're willing to take all the steps, and it's only when all the markets are frozen that you go, at which point the government has to decide, is it a liquidity or a solvency? If it's a solvency, it may require wiping out the equity of these entities and taking them over, as for example, I think ILFS has been done.
And this really has to be a judgment call between solvency and liquidity, and that's a good point made, sir. But I know there is a certain other issue that's in the public domain now, especially given the kind of letters that have been exchanged between the government and the RBI and the disagreements. And one of them is to do with the RBI dividend. I know similar demands were made when you were in office. Has the time come to have a more comprehensive look? Because there are two sections of expert opinion here. One that believes this is money that's for the rainy day, the government has no business touching it, it's the wherewithal of the RBI. The other that believes this is not RBI's money and why should it not be used by the government of the day. My real question is, I don't want you to get involved in another controversy as far as that money is concerned, but from a a larger decision point of view, do we need to have a comprehensive review of how the dividend is maintained and shared?
Well, we tried 3 times when I was governor to have a comprehensive discussion on this dividend, because it always becomes a source of controversy, especially as we get closer to budget time. And I wanted to make it a much cleaner and mechanical process. And I see that we haven't really solved the issue yet. Let me explain, because this is an issue that people need to know about. The reality is the RBI is a fully owned subsidiary of the government, which means that whatever value of equity there is in the RBI is an asset of the government. There is no two questions about it. It belongs to the government. Now, that said, is there reason to leave some equity on the RBI balance sheet and not take it out as a enormous dividend? And the reason for that is we have a country which has a BAA rating. If the country went out to borrow in the international capital markets for some emergency, it would have to pay rates at that BAA rating rate. Having the RBI as a separately capitalized entity which has a AAA rating, and that was what the board in my time counseled would be what the RBI should focus on, gives you a vehicle which can actually make promises in international markets that are credible. One place we had to make the promise was in the swap agreement in 2013, because we were essentially guaranteeing we'd pay up on those swaps, even though all that the entities on the other side had to take was our word. But we were good for it because we had plenty of capital to back the payments we would have to make. And so for a rainy day, it helps to have one entity in the country which is well capitalized, which can hold its own in international capital markets. Now, the first aspect of dividend is, will it essentially maintain that high quality rating that you want for the RBI? And today, I think, with the recent depreciation in the rupee, the value of the RBI's equity has gone up, because remember, the RBI has 400 billion or so in dollar assets. When the rupee depreciates, because its liabilities are in rupees, essentially its equity goes up. So now it probably has a reasonable amount of equity. So then the second question comes, okay, you have a reasonable amount of equity, you can pay. How much can you pay? And this is where the accountants keep telling us, including somebody as venerable as Mr. Maligam, who was on our board, you cannot pay more than the profits. So, okay, we can pay the profits, we can pay as much as we make. And that is what we were doing during the 3 years that I was governor. We paid all the profits, not holding one naya paisa back. Then the third question comes, okay, can you pay more than this? And of course, there's the accounting issue, there's the creditworthiness issue. But beyond that, there's a third issue, which is that the RBI is not like an ordinary PSU. It actually prints the money, which means that if I pay an extraordinary dividend, let's say 3 lakh crores, it essentially means 3 lakh crores more of money is there in the capital markets. And that is going to be inflationary. So as I pay the 3 lakh crores to the government, I have to then sell government bonds in the market to suck out an equivalent 3 lakh crores in order that we do not have an inflationary situation. So unless I really make profits, which I can give to the government because the money made of people in the market, if I pay anything more, it becomes inflationary, and I have to take it back by selling bonds. Again and again, I've emphasized, and you can see my speeches, that really there is no free lunch here. There is no 3 lakh crores the RBI can give the government and say, do what you want with it, because it gives with one hand and it sells an equivalent amount of government bonds in the market. Net, the public sector borrowing requirement does not change. The government has the same problem financing its deficit as it had before, because this 3 lakh crores simply cannot be used.
And may I dare add, 3 lakh crores in a pre-election year, I think it's a prescription for bad policy, if I may add my 2 bits to this. But Dr. Rajan, very quickly, the PCA norms, and there has been a big clamor, and there seems to be some meeting of minds, I don't know if it's going to happen or not, but there is a big clamor that should PCA norms for those 11 banks be relaxed so that there could be more lending to the MSME sector. Do you believe we can do this at this point in time? Because, you know, we are in the middle of the NPA clean out, and yet there are these MSMEs that are fund-starved, and there is this war cry that maybe we should look at relaxing some norms as far as these 11 banks are concerned. Could this be counterproductive, or do you believe we can afford to take that risk?
Look, again, let me not go into the direct details of the PCA norms. What I find problematic sometimes is in arguments that, oh, Basel says this, why don't you go down to the Basel level? Well, it is true that on some issues, Basel may be a little more flexible than the Indian situation, but there are many other places where the Indian situation is much more flexible than Basel. Ultimately, if we go strictly by Basel, we will get accused of being in the thrall of foreign hands and so on. You're listening only to foreigners. On the other hand, if we do some things based on the Indian situation, you're accused of not following Basel, especially when it's tighter than Basel. I don't think this is a debate that is really a serious one. What you have to ask is, what are the Indian conditions that require a certain level of precaution? And the RBI as a professional institution should be trusted if it can explain why that level is needed. By all means, ask for an explanation, but then let them use their professional judgment. Now, on the MSME, you know, go to any country in the world, find an MSME which says it isn't starved for funds. The reality is MSMEs are hard to lend to, which is why they're always clamoring for more funds. The right way to get more funds to them is to improve the formalization, the kind of business environment they operate in, which is why I think if the sort of improvement in doing business ratings that we've seen in the recent past is real, then in fact that's a good way to help the MSMEs. But simply opening the tap wider for them or saying less provisioning, this, that, runs the risk of making loans that then come back to roost as higher NPAs. My worry is that we have to do a proper assessment of the loans we've already made. What has been the experience with the Mudra scheme? What has been the experience with other MSME lending? And my worry is the NPAs there are far bigger than we think, especially because there's a constant clamor to say, don't declare it an NPA. That suggests that we should be more worried rather than less worried. And, you know, I think the government is right in going on a path to expanding sort of the possibilities of MSMEs. The right way to do that is to improve the business environment and to improve the credit process, but not to relax credit standards. And that, I think, is an important distinction which we should keep in mind.
Dr. Rajan, before I wrap, I have to ask you a question. You know, while the RBI and the government were seemingly disagreeing a lot in public, and many people thought this should have been done more in private, it almost seems to be, you know, muddying of waters further, because now the CIC has issued a show cause notice to the RBI to reveal names of defaulters that you had put in a list when you in February 2015 to the PMO. The RBI has asserted it cannot disclose that, and I'm quoting from their response, because large value cases of frauds are under various stages of investigation and minutes of action taken report contain confidential information about third parties, and this could impede the process of investigation. Are you, in the meantime, after giving those names, are you satisfied with the action taken in a whole host of cases? Because the RBI has also explained that multi-pronged agencies are working on some of those cases.
See, I think there are two separate issues which are being confounded. One is the issue of fraud, which is not necessarily the same as willful defaulter. Willful defaulter is somebody who doesn't want to pay, but who hasn't necessarily run away with the money. I think on the issue of frauds, the full sort of arm of the force of the law should be employed to bring these frauds to book and to essentially show that the Indian sort of law enforcement structure is capable of doing that. That certainly is work in progress. Separately, there's the issue of a number of business people who the banks believe are not paying them when they have the ability to pay, and eventually through a quasi-judicial process declare them willful defaulters. I am not well versed enough in the legalese to understand why those names cannot be made public after they've been through a judicial process, but this is something that belongs to the legal realm rather than something I have expertise in.
Do you believe there is enough political will in India to crack down on billionaire defaulters?
Look, I don't know. I will go by the noises that are made, and it certainly seems to be that there is an intent to bring these people to book. But I do think that from the longer term perspective, if frauds go by unpunished, it simply encourages more fraud. If there is a sense that there is no place on earth where you can hide because the long arm of the Indian law will come after you, I think it will send a very, very sound message because you won't be able to enjoy the ill-gotten wealth even if you make away. This message needs to be sent if we are to protect our banking system because ultimately you cannot prevent fraud, but you can create the incentives such that it doesn't pay.
Fair enough. Two last questions before I let you go. And one of the big bones of contention between the government on one hand and the RBI on the other has been supervision of public sector banks. What has been your own experience as India's central banker? Is it restricted? Because the counter argument to that is that you've got enough and more supervision on the private sector banks, and look what's happening there.
Look, I mean, you can always enter an endless debate about this process. Let me just say that there is room for improvement on all sides on the governance of banks, both in the private sector as well as in the public sector, both in the role the government plays as well as the role the RBI plays. And I think we have to recognize that the level of NPAs in both the public sector as well as the private sector is not by any means a level to be proud of. So we have to all examine what went wrong and do what is necessary to put the banking system on a healthy turf, because going forward, the amount of lending we need to get to that 9-10% growth that we absolutely must have in order to employ all the people that are coming to the labor force, we need a healthy banking sector. Every side has to contribute, and there's really not much value pointing fingers at each other. There's plenty of work for everyone to do.
Dr. Rajan, on that note, thank you very, very much for speaking to us. It's always a pleasure chatting with you. We hope to see you in India soon, and we do hope India's banking regulator and the government can see eye to eye. The reality is that they are fighting right now. And I do want to ask you a question before I let you go. What does this public showdown really mean for markets as well as the currency? When there are rumors that float around about India's central banker, the possibilities of him quitting, what does this mean for sentiment at large?
Look, I would rather hope that people take the right lesson from what has happened so far and back off from the brim. From the cliff edge. I think both sides have to listen to each other, but I think there has to also be a respect of each one's turf. And what to my mind is most worrisome is the change in the role played by the RBI's board in all this. The RBI's board is not an operational board. It's not led by professional supervisors or central bankers. These are all people from different walks in life whose main role is to play the wise people, to advise, to counsel, to play a Rahul Dravid, to coach in some sense, but not to make operational decisions, and certainly not be loud a la Navjot Sidhu. This is really what I'm very worried about, is the change in tenor. They are supposed to be the wise people who bridge differences rather than force greater ones. We've had excellent people on those boards. There are still very good people on those boards, and I would hope that they would come together to bridge these differences and reduce some of the noise that is coming. I don't think India should have a breakdown in dialogue between the central bank and the government. I don't think it needs to happen. I don't think if wiser minds prevail, it will happen.
Dr. Rajan, I know you won't take names, but the presence of certain people on the RBI board seems to be widening this divide between the government on one hand and the RBI on the other. Does selection of board become more important, and do people like S. Gurumurthy need to be kept out of those boards?
Look, I don't want to comment on specific personalities, but really the government appoints people on the board primarily to ensure that the governance of the institution is in the direction that the country desires, to check that they're not paying themselves inordinate salaries, but also to give them a guidance about what different people from different walks in life think. We had an Ila Bhatt on it, we had Professor Kakodkar, all very wise people who gave us direction, and we listened to them. I think that is the role of the board, rather than to intervene in operational decisions and to substitute their judgment for the judgment of the professionals who actually manage the RBI. And so I think we need to do this separation, because clearly in the recent past we are transcending what should be the appropriate role of the board. And I hope that there is a dialogue between all the parties concerned to reset what in fact should be happening.
On that note, sir, thank you very much for speaking to us. We wish you a very, very happy Deepavali and a great new year from all of us here at ET Now. Thanks very much, Dr. Rajan, for sparing time.
Thank you, and same to you and your listeners.